Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD currency pair. Jakub Novak presents.
In the context of a lack of economic reports due to the government shutdown in the US, unexpectedly positive data on consumer confidence and manufacturing activity in Richmond triggered a surge in demand for the US dollar, and, consequently, a decline in interest toward the euro. The absence of comprehensive economic data due to the shutdown continues to pose significant challenges for accurately assessing the current state of the economy, and exacerbates instability in financial markets. This morning, there are no macroeconomic data available for the Eurozone, reducing the likelihood of a significant recovery for the euro. Market participants are focused on the Federal Reserve decision on interest rates. Monitoring signals for a more aggressive tapering of quantitative tightening is especially important. For this reason, until there is a clarity on the Fed's actions, investors should exercise caution and consider the risk associated with sudden currency fluctuations. Today, you can buy the euro when the price reached around 1.1640, with a target for growth to 1.1673. At 0.1673, you could plan to exit the market and sell euros back, anticipating a move of 30-35 pips from the entry point. One can only expect growth in the euro within the framework of a correction. Before buying, make sure that the MACD indicator is above the zero mark and just starting an upward move. You could plan to buy the euro today if the price tests 1.1620 twice while the MACD indicator is in an oversold area. This strategy will help limit the pair's downside potential and may lead to a market reversal. An increase can be expected in the opposite levels of 1.1640 and 1673. You could plan to sell the euro once the level of 1.1620 is reached. The target will be 1.1587, where you could plan to exit the market and immediately buy back, anticipating a 20-25 pip move in the opposite direction from that level. Pressure on the pair may return at any moment today. Before selling, ensure that the MACD indicator is below the zero mark and just starting its downward move from it. You could also plan to sell the euro today in case of two consecutive price tests of 1.1640, when the MACD indicator is in an overbought area. This will limit the pair's upside potential and lead to a market reversal. A decrease can be expected in the opposite levels of 1.1620 and 1.1587.
And now it's time for GBPUSD. Let's discuss it with Paulo Greco.
The average volatility of the GBPUSD pair over the last 5 trading days is 77 pips, which for the pound-dollar pair is considered as moderate. On Wednesday, October 29, we thus expect movement within the range limited by the levels of 1.3207, 33.61. The upper linear regression channel points upward, indicating a clear upward trend. The CCI technical indicator has entered the oversold area 3 times and is now close to a 4th entry, warning of a resumption of the upward trend. The GBPUSD pair is trying to resume its 2025 upward trend, and its long-term prospects remain unchanged. Donald Trump's policies will continue to exert pressure on the dollar, so we do not expect the American currency to appreciate. Therefore, long positions with targets of 1.3672 and 37.33 remain much more relevant now, while the price is above the moving average line. It's a sign line on the graphic. If the price is below the moving average line, small shorts positions can be considered with targets at 1.3245 and 3207 on purely technical grounds. From time to time, the American currency shows corrections, but for a trend-based strengthening, it requires real signs of the end of the trade war or other global positive factors.
That's all for today. See you online soon.